Know the difference with Annex Wealth Management? We recently had an Ask Annex question about a number of terms you'll hear in the investment world. And we got back to him, but it occurred that a quick course on some of the terms might be beneficial for everybody. Who better to take us through that school than Todd Voit, Chief Investment Strategist at Annex Wealth Management. Welcome, Todd.
Thank you.
Todd, you're well equipped for this segment. You taught graduate and undergraduate courses in investments, advanced investments, and international finance courses for over 20 years at a large university. You have a PhD in economics with concentrations in financial and international economics, along with a Master of Economics and a BA in economics. Did you have any fun in college at all?
Well, I wanted to clarify something. I worked through all that. I lived across the street from the university.
Odds of tripping you up on some of these terms are incredibly low. The first term we'd like to define is one that's in the news often when there's volatility, and that is correction.
Correction, you have to keep in mind that it depends on who's doing the defining, but it's generally accepted that a correction or a drop in the market is 10% or more in the index level. That's somewhat related to a bear market. Bear markets are markets that fall 20% or more. Again, keep in mind the feel of the market and the dynamic of the market can be something completely different, where you can have a 30% drop in the market. It's basically like a correction.
But a correction is normal. We see them often?
Absolutely. Corrections you'd see a couple of times a year, and I'm glad you actually said that's normal. In the context of today's environment with the market, it's not corrections we worry about. That's just a normal part of the dynamic of the market. It's bear markets you got to worry about. The prospect of a market trending down 20% or more. What have you done to prepare for it? What are you doing to take certain action? Corrections, they come and go.
Everybody's heard the term recession. Most of us have seen a number of them. What's the definition of a recession?
2 consecutive quarters of negative GDP growth or negative economic growth. That's the formal definition of a recession. Again, there's the more the look and the feel of it. You have growth, recessions and things that are going on that might not by definition be a recession, but it feels like a recession. For example, today, real wage rates, they're not keeping up with inflation rates. So people aren't feeling too good about higher gas prices and food prices, yet wages are going up 4%. Well, inflation's going up 7%. So it doesn't feel like a real growth environment. Conversely, you have recessions that they may by definition not be recessions, but they feel like recessions.
Even though the last one was a long time ago, the term depression casts a long and scary shadow over most of investment talk.
Right. And so that the last time that topic came up was probably 2008, the dark days of 2008, and a significant decline in economic growth. And economic growth, it's similar to like we're talking about recession and bear market, recession and depression. Depressions are just deeper swells in economic growth than a recession.
But the last official one was, in the 30s, right?
Yeah, in the 1930s.
Okay. Todd Voit, Chief Investment Strategist at Annex Wealth Management, walking us through some of the often used terms that you're going to encounter. Often during our weekly recap of the markets, Dave and Derek will mention growth and value stocks. What are growth stocks?
Growth stocks are traditionally, and this has been around for a long time, high earnings growth, high sales growth type companies, high returns on equity to shareholders, that type of thing. But think of it as high sales or earnings growth companies. Value stocks are those that might be cheap based on some valuation metric. A simpler way to think of it, value stocks are those that pay really good dividend yields. And dividend yields is an indication of value, but there are other metrics used to determine value.
Earnings season is quarterly with a number of different data points. Are there key terms in these reports we should look at, like earnings or earnings per share or revenue?
Absolutely. And earnings season is a time, for example, where you go through that in mid to late, say mid-January to mid-February for the fourth quarter of the previous year. You get into April, you get into July, you get into October. Those are earnings season periods where companies are reporting the previous quarter's earnings results on publicly traded companies. The earnings number is actually pretty simple to arrive at. It's sales minus cost is earnings. So how does a company increase earnings? They can increase sales, they can reduce costs, or they can do both. Earnings per share is simply the amount of earnings on a financial statement divided by a number of shares outstanding. I want to make an important point about that, because this ties in with the valuation of the company. And is a stock expensive or cheap? You don't look at a company and say, this company's share price is $100, the other one is $60, therefore the $100 stock is more expensive. It's just expensive in the share price, but not in valuation. So PE, for example, price per share divided by earnings per shares cancel, and you have a number, 14, 20. If it was my sister who knows absolutely nothing about the market, I would explain, just look at the PE ratio as a valuation measure, and it's just an absolute number. It can range from, let's say, 14 to 20, like the market. 14 is low, 20 is high. Therefore, higher than 20, market's expensive. Lower than 14, market is cheap. Same thing with an individual stock.
We're running a little short on time. I had asked you about shorting and I asked you about options. Maybe we'll do that for another segment if you can come back.
Oh, yeah, absolutely.
For investment, retirement planning, tax planning, and estate planning as a fee-only fiduciary, know the difference. Website, annexwealth.com. Click that Get Started button. Start the wealth metric process. Todd Voit, Chief Investment Strategist, Annex Wealth Management. Thanks for joining us.
Thank you.